Oh, you're on Zoom?
Yeah.
I can never get in.
Yeah, I don't get this. All right, ladies and gentlemen. Or these ladies. I'm gonna go back here so I can actually see my slides and talk to you.
Yeah.
But we're gonna go over all kinds of stuff today. So let's just dig in. Okay. So what I want to talk about first is to help you to know how do you talk about your buyers, talk to your buyers about financing. And it's not like you actually know what you're talking about. It's that thing that I think scares you guys the most. If someone starts asking you questions about renting, and then you have to start coming on holiday. We want to dispel that here. So first thing I want to say is don't show houses without pre-approvals. You are wasting your time.
Yes.
And it's really hard to get people to go through the pre-approval process. I don't know why, it's pulling teeth, but if somebody wants to look at houses, be insistent, say, you know, you need to be pre-approved. I mean, even if you have to go to the point of time, even if you have to say to them, I can't sit, you know, the seller won't even let us in the house if you don't, if you're not pre-approved, whatever it takes. Pre-approval, otherwise you are wasting your time. Don't spend too much time with an unapproved buyer. And many of them will be unqualified too, so be careful of that. And also beware of the buyer who is not pre-approved, but thinks that they should, you know, acts like, you know, I'll get there, don't worry. Worry. Yeah, worry, because those are the ones that are always the hardest to get.
They're always lazy to provide everything.
Yes,
Kind of like you want to buy or no?
yes, oh. Okay, so how do you ask questions? So level one, have you worked with the lender yet to get pre-approved? Yes, okay, great. Do you have the letter? Who's the lender? Give me their contact info. And I do recommend that you call their lender and just ask questions about the borrower.
Really?
Yeah.
Will give us the information that's not confidential.
They don't have to tell you everything secret
Yeah.
about them, but they can tell you that it's a strong borrower, it's a weak borrower. So they never really gave me everything I needed, just gave them a letter. They'll give you the story.
Really?
Yeah,
That's great.
so I would definitely recommend, you're also gonna learn in the process, is this lender responsive? Do they answer their phones? Are they available? Do they sound like they know what they're talking about? You know, is it a call center? I mean, you're gonna find out a lot like in that question. And then if you find that it's not a reliable source, then you can start talking to them about potentially talking to your lender instead. If they tell you no, they're not pre-approved, then say, don't worry, I can introduce you to someone who's great. Do you have any concerns about getting qualified? And then whatever they tell you, well, I got credit issues, I don't have enough payment, you know, whatever the case might be. Okay, your response is, well, my lender works with people in all stages of the planning process. In fact, she specializes in credit issues or in down payment assistance or whatever the case might be. Can I have your contact info and have her call you for an exploratory conversation? And it's always a conversation. It's not a hard sell. So, and something I want to, that is fairly new is that I can actually do a pre-approval with a soft credit pull. I never used to be able to before. There was always a hard pull, and that was one of the hardest things I can get people to get agreed to and come around with. But now if they know their credit's not going to be messed up, you know, if they don't qualify, no big deal, no harm, no foul, let's drop it. It's a game plan, you know, that's important. So step one, ask broad, open-ended questions and then drill down. How can I help you? Tell me more about what you're considering doing here. And then make sure to ask about kids. Do you have any kids? How old are they?
Is it allowed?
Yeah, why not?
Well, because of HUD. How are you supposed to know what's required for them, what their needs are?
curious,
No,
you're having a conversation. You may have kids yourself.
because I made this mistake once.
Yeah.
About kids, remember?
Yeah.
So the whole night.
Was it on a role play thing? Was it an exploring situation or was it?
It was like a haunted house. Haunted house.
Well, then I'll put an asterisk on that and do some more digging, because
Yeah.
I think it's so important to
Yeah.
understand. Yeah, understand their motivation and their needs and stuff like that.
What do you want them to say?
Yeah, so
Yeah.
they said, if they open this up, you can continue with it, but if you don't ask.
Yeah.
So it's always been coming back to tell me more about what you're considering.
Right, yeah, that's,
Exactly.
What are you looking for and why?
and they'll tell you.
It'll come out. And then it's free reign.
Yeah.
There's always a way. I strongly suggest the use of a precedent. Hi, welcome. So this is where I use one with every single conversation I have. And I capture all of the key pieces of information that I need. In my case, what I need to make a quote, you know. In your case, it's, you know, all the key things. I have this, by the way, and I will send it to you.
I have projects.
So, don't overly worry about. And I got this from interviewing Philip. And I said, okay, Philip, I want my house, what do you need to know? And so he started asking me questions and this is how I came up with the sheet. But I like the sheet for a number of reasons. First of all, it's a piece of paper that I can go back to and look at that has all my notes. It's one central place. Secondly, or if I have one, my assistant could take it and put it in my CRM. And then it's just a way to memorialize every
So
conversation.
you're gonna send us the sheet and we could make copies?
Yes, because otherwise you're gonna forget. I've got the worst memory in the world and I forget nothing because I use my CRM and it reminds me of everything. So don't wing it. Okay, finance questions. If you like to go a little bit deeper, here's what you could ask. You say, what's your source of income? Are you salaried, self-employed, or, and that's exactly the way I ask. I let them fill in the blanks and I get their information. And then no matter what they say. Well, it's interesting, my lender specializes in that. Can I give her your contact information and have her call you for an exploratory conversation? And it doesn't matter how crazy it is, it's like, yeah, I'm self-employed, but you know, I take a lot of deduction and I don't really chill much. It doesn't matter. Your lender specializes in self-employed borrowers, so I can handle that, you know, we've got something for everybody. So the options are self-employed, salary, W-2, retired, assets, rental income, multiple sources, sounds complicated, recently divorced. All of these scenarios are very common and there are solutions for everything. When the client asks you questions about rates or loans, that's the scary moment, is that, well, what's the rate? Aren't rates really high right now? Or, you know, what kind of loans do you have? Your answer is, that's a lender question. I can tell you, but I'd rather you hear it from the expert. So I stay in my lane, they take care of theirs, they're my partner for a reason, they specialize in this. So please, let me just have them help.
I know the rates are in the 7-inch right now, but someone told me, and I thought I was surprised that they got something for a client of theirs not too long ago, maybe a month ago, for 5.75.
Yep.
Was that, what, did it drop and go back up? Because
Maybe a buy now.
There's all kinds of possible ways that can happen. I just did a condo loan for 5.5. And it was because we had a special grant program. They got a $25,000 grant. And they took it, they used part of it to pay down their rate, so they got a lower rate artificially that they paid for on that 25. Plus the grant money paid for their closing costs. So they got a phenomenal.
so can you do that today too, or is it over?
No, it's still going.
It's still going?
Yeah,
So 5 is possible,
yeah, high 5s to mid 7s.
depending on the situation, okay.
Yeah. More level 2 questions. Do you have any concerns about qualifying? And then whatever they tell you, Good, it's good to know. Please make sure you let the lender know upfront so she can help you with the workarounds. And these are the 4 categories of things that we're looking at when we're looking to qualify them. They're assets, income, credit, and debts. So assets, we want to know how much they have for down payment and closing costs. We want to know if there's any reserves, because that strengthens the file if they have, say, retirement funds or something, even if they're not using it for the closing. Their income, are they showing enough income for a full doc loan, which hopefully they will. Otherwise, there's other options. Do they have a 2-year history? And sometimes you get these people who are just started Ubering 6 months ago. It's like, no, 2-year history, please. Do they have good credit, of course, and it doesn't matter if they have an armload full of loans, because that's because we can pay a lot of those off in the purchase. So debts alone don't scare me. Yeah, their debt to income ratio is technically. And as far as yeah. And we want at least 2 out of 4 of these things to be fairly solid, because then we can work with it. There's workarounds for everything, but if they have no money for down payment, they don't make any money on a monthly basis, their income is terrible, and they have bad credit, forget it. You know, we're not trying to
Sandy, which one can be cured? Is the income history? Yeah, the one that can be cured.
pretty much that's the only one that you just lot less control. Yes. All the other ones you can figure out. Then there's the borrowers who don't fit the mold. These are your people who are self-employed, who get very creative with the finances, foreign nationals, ITINs, low credit scores, no credit whatsoever. People are looking for construction and land loans, 5 or more units, manufactured homes, down payment assistance. These are all specialty, kind of not fitting in the box kind of clients. There are options for all of them. Just don't expect me to have them all memorized, but you know, I worked with them, I can find them. And then here's kind of a menu of loans, just so you know. So when I get a client, first thing I try to figure out is, do they have documentable income that I can use? Can we go with the full doc program? Always start with that because that's going to be your best pricing. But then if it's a little bit off, and let's say they had really good tax year this year, but the year before was terrible, or they don't show any income whatsoever, but they have a lot of money, or they've got a big retirement account. Those are some good examples of alt doc loans, which means that we can find something for them. It's not going to be the standard, but it's going to be something good.
Does it get Tansin as the
Gifts are almost always 99% of the times people and credit. Yes.
What do you mean by investor loan? You know, so that's for like construction. Oh, sorry.
Let me go first. So that next, if they don't qualify for either of those, then I ask, well, can we do a bank statement program or other non-qualified mortgages, which is what non-QM loans are called, which means that we'll look at 12 or 24 months bank statements, and we'll take their net deposits and we'll use that as their income. That's for self-employed only.
Sandy, sorry, I'm sorry, but
Yes.
so for the first and second program, you
Yes.
still need the bank statement, right? The home ones.
Well, it's with an asterisk, because you can do a full doc loan, but not have any money. So you don't, like a 0 down program, that's a full doc loan.
But they don't ask for the bank statement.
Well, I'll ask, but if they don't have any to give me, I can still do a loan.
Okay.
Yeah. She asked about the investor loans, no, she's right. Okay.
So let me ask another question.
Okay, go for it.
So if you have a foreigner, I know it's not here, it's the previous one,
Yes,
and he wants to invest here,
yes.
which is the case that I'm dealing with now. And he has a relative here.
Mhm.
So which better option for him to open LLC and pour the money there and like just work as a foreigner partner, or to just gift it to his relative and do all the business with his relative?
I would probably look at it both ways and do a comparison and see which one looks better. Because does he want to pay cash? Doesn't sound like it.
Like he works, he's a mortgage maker in Israel, and
Yeah,
he wants to do business here. He has other partners, like one of his ones here. So you wanna just do the fixer with the houses.
so just so you know, 99% of loans are done to people, not companies, you know, not like LLCs or entities. But there are some ones out there that will do it to the entity. But what most businesses do is they'll do it under their name and then they'll transfer it to the firm.
Okay, I have another.
There's a variety of ways to attack that. Okay, now I can talk about investment.
Sorry.
So DSCR, debt service coverage ratio, this is the type of lending that they do in commercial. And they now offer it to investors. If you are buying an investment property, this loan does not look at your income at all. It's regardless of the income. All they care about is whether the rental property will that flow, basically, whether it will cash flow. So if you make enough rental income to offset the entire housing expense, principal, interest, taxes, insurance, HOA, then you're in. That's all you need.
Yeah, it's tough.
Yeah, it is.
But it's still in the seven.
It's definitely in the sevens,
Yeah.
or more. And it's gonna require more down payment, probably at least 20, maybe 30%.
That used to be
What
what
do you need
you
at 7?
7%. Like it's.
Oh,
But you almost, one of the things about the down payment on these programs is because you have to cash flow. The more down payment you put down, the more likely you are to cash flow. So obviously, you throw more money into it, you're eventually gonna hit that number. And it's a cash flow. But they don't.
But it's better than getting a hard loan.
Yes, it is.
Cause that's what, I know some developers where they will buy a house and know that, you know, they think they could do it all cash. And then they'll get into some situations where they're like, they need more money, so then they get a construction loan, and they just do hard money, short term, like 3 months.
Yeah.
What kind of, do you have short term on these too?
So a lot of them are 30 fixed and some of them are like 7-year arms, so it depends.
But you could, I mean, you
Obviously,
sell the
there's no-
house, you could pay back in a year, there's no penalty paying back early.
There might be in some of them, so we'd have to look case by case on this.
Nice.
But these out loans, just so you know, incrementally, they get priced higher. As we go down the road here.
Oh,
so this doesn't include the construction, just the loan to purchase, right?
Yes, correct. Then the no ratio loan, which is similar to what used to be called stated income, in that they don't care about your income. They only care if you get a down payment and you have good credit. And if you do, you can buy any home you want as a owner occupied or whatever, and that's all you need. Rates on that are not great, but you know, but for the person who wants to in on a piece of property at all costs and has nothing to offer, we got a loan for you.
this is for overseas people with money.
Yeah, there you go. And then there's reverse mortgages, which is for people 55 and older, and sounds like I need to do a class on that.
Yes, you will.
Yeah. So I wanted to let you know about some flyers that I have available, and I will also send these to you in my email afterwards. Sign sheet. But there's one on closing costs, so for people to understand how much they need to set aside for closing costs, because very often I get somebody who tells me that they've saved $5,000 for their down payment and closing costs, and I'm like, yeah. You're at least a negative 5,000 then, because, you know, closing costs alone are gonna cost you a few pennies, but okay, good to know. So, there's a flyer available to you there. On this flyer, this is good to give to renters, first-time home buyers. You can illustrate that, for example, if you're currently paying $3,500 a month now, in 15 years, you will have thrown away $630,000 and you have nothing to show for it.
Can you put our pictures on there?
I can't. I'm gonna send you the one that I have with just me on it, but if you want anything co-branded, just let me know. And then this one is also very good for kind of bringing people to reality. So let's say, for example, okay, I can't spend any more than $3,000 a month. Okay, well, let's just pretend we can get a 6% rate. Let's look at 7 because 7's more likely. So we're at 2,600 here, plus taxes and insurance of 500. So that's around $3,100 ish. That means that you can buy a home for 500,000 with 20% down.
Nobody can put these days on that. But no one that I met.
So if you're putting in less than 20% down, you're getting even less house units. Anyway, this is a good reality check
Yeah, that's good.
and give you a
Can
fast.
we put our
reference.
picture?
Yes. Okay. Now I want to kind of go over a lot of these first time home buyer programs with you. So challenges today for home buyers, affordability. I mean, it's ridiculous how much money you have to pay for mortgage these days. And also down payment, you know, people have sadly very little saved for down payment. When I come across somebody who's actually got 75, 100 or
Yeah.
more put aside for a down payment, I'm like, oh, wonderful. No. But mortgage rates, while they are considered high, I'm gonna no longer use that word with mortgage rates.
Right.
Mortgage rates are normal today.
They'll be loaded.
So, you know, mortgage rates are not the issue. Home values, however,
Yeah.
are crazy high. And I mean, I'm happy as a homeowner that they've escalated the way they have, but, you know, we need a little bit more normalcy in terms of home values so that people can
I think
actually move.
it's gonna be soon, right?
No.
Well, that's here.
Can
hopefully,
we
yes.
say where? Yeah.
Go for it. This is
Something with this,
Yeah.
let's see.
But one thing to keep in mind with clients is we tend to really focus on the finance aspect of it. We tend to be very focused on, oh, the rates today, or, you know, the value of the home or whatever, but people move for a lot of reasons. So, you know, if you're a grown family, if you've got a baby on the way or something along those lines, that's gonna take precedence. And you should really focus on the fact that they need a permanent place to move and raise their family and not even talk about the finance part. And just, you know, let's figure out what you can afford. Let's find it, you know, get in there. And then once, of course, I come back to you and I give you a number because I've pre-approved somebody, then you can start squeezing me like everybody always does. Well, okay, they qualify for 500 and they get 550. But not 575, you know, it's like.
Cindy, can we tell, like, from my experience as a homeowner, we purchased house with 4.9. And then we were having like some extra money every month.
Mhm.
And at some point also we did the 2 weeks payment, and this like just eliminates this addition to the interest rate. Because every dollar that you put, it actually like eliminates some
Yeah.
percentage of the, can we use this as, you know, like motivation for them?
Yes, people don't understand that concept, and they don't understand the fact that once you have a mortgage, it's very easy to bring your payments down
Yeah.
over time.
Mhm.
It's that first step going from rent of $2,000 to mortgage of $5,000 that it's like, you know, it kills them to
Just
do
this
that.
is a-
You gotta get them to see past that. Maybe it's $5,000 today, but it's not gonna stay at 5,000. And your rent might be $2,000 today, but it's not gonna stay at 2,000, and it ain't gonna get better. So yeah, I would definitely talk about things like that. You know, all the various reasons why people want to move, I would find out in my exploratory with them. Everything you can about what's their motivators and write it down in your little, you know, sheet so that you can make sure to keep reminding them. And not focus, whenever they start focusing on something like, oh, this is too much, you know, and stuff like that, then take them away from, yeah, but what are you gonna do? You got a baby on the way. You'll make it, don't worry. So, various solutions that we have today, we have grant programs, we have down payment assistance programs, we have low money down programs, and we also have a program to help people who don't want to have to sell their home before they buy it. So the zero down programs, we've got about, I want to say 6 to 8 different lending sources that we use for our various down payment assistance programs. And they all have their own set of guidelines and they're all different. This one allows this one doesn't, you know, et cetera. So it's like, you know, it's impossible to create one master matrix. This is about the best we can do. Maximum loan amounts, most of them are up to the conforming limit, which in LA is $1,089,300. The minimum FICO scores vary. 600 is the lowest that I've seen. But if somebody comes in below 600 and we can manage to rescore them to get their score up higher, then, you know, I still wouldn't say no can do. Income limits can vary. Some programs have an income limit, some don't, but there's also some sneaky ways to get around that by saying maybe we're bigger than you do or whatever. Many of them have second liens, so they usually piggyback off of a first mortgage, usually an FHA, and that has all but 3.5%, 96.5% financing basically, and then they give you a second lien. So the second lines of credit, the second loans rather, may or may not require payment. They may or may not require being paid back. There's a lot of different programs that do it different ways. Sometimes you can finance the closing costs. Usually you can do single families, condos, and in some cases duplexes, but no 3+ units. And PMI, monthly PMI is required on all of these. Any program that is less than 20% down is going to require mortgage insurance.
So can they pay, when they get to 20%, can they
Yes.
take off them
Yes.
PMI?
And that's another one of the fast ways to actually reduce your monthly payment as soon as you get your value goes up and up.
But you know what I noticed? That if you don't ask for it, you're gonna keep paying.
Yeah.
You need to notice and ask.
Yeah. And work with a lender like me who has a terrible memory, so I have a CRM system that's really good and always reminds me to check in with people and say, hey, maybe we should look at refinancing.
There you go.
That's good.
So the $25,000 grant program, I mentioned that to you earlier. It's a really great program. So I did put the all the parameters around this one. The one thing that that is kind of unique here is that the property has to be in an eligible census tract, but that census tract has to be 50% or more minority owned. So a house in Calabasas is not going to qualify, but a house almost anywhere else in LA will because of that.
I'm sorry, what is it? It's
The house has to be in a census tract that's only 50% minority.
minority. Okay.
50% what is it?
Minority owned.
What do you mean? What do you mean by that?
That means that the owners who live there, at least 50% of them are not white people. Basically. Yeah.
Like white immigrants come.
Yeah.
Yeah, so there might be, yes, immigrant.
Immigrants, yep, non-American whites. Or non-whites, non-white, non-American, either way.
This will also be in the email,
This will be what?
in the email,
Yes.
because I sent it to.
Yeah, and I have a flyer on this too, by the way. If you just don't have enough funds today to make this happen, so, oops. What happened? Oh, I guess I didn't do my slide right. Okay. Let me come on. Here we go. Okay, and you get gift funds. And you borrow against a 401k, Mazer, they were all ready to say they couldn't do this deal. And I said, do you have any 401ks? And they said, yeah. I said, can you lend that against it? They said, well, yes.
Yeah.
We'll find out. And they said, is that wise? And I said, yeah. You know, that's what they're there for. The $25,000 grant program we have is not the only grant program in the world, but grant programs by their nature are temporary, meaning that somebody has allocated a pool of money to go to assist people. And once it's gone, it's gone. So we saw that with the big Calabasas thing not too long ago.
The seller's motivation cuts it down.
It doesn't really have anything to do with sellers, but even CAR, you know, California Association of Realtors, they have a grant program for minorities, and it's $10,000 for down payments. But when you really dig in, it's like they only have so many of them. They have 25 of them for all of Southern California, so it's like winning the lotto. But it's definitely worth looking into if there's any grants available. And then otherwise, I tell people, start saving your money and set up a target and plan for it. So if somebody tells you, I want to save more money before I start the process, then say, well, how much do you want to save? And if they tell you, I want to save at least 50 grand. Okay, well, how much are you putting away each month toward that now? You know, help them to really understand, is that a possible achievable goal in the near future, or are you just blowing me off?
Exactly.
Okay, let's see, how do I get back to the slide? Next slide.
There was, I'm sorry, there was also something else that the government was offering to help you with the down payment, but that's done, like a 20%.
Yeah, they're not gonna be that change.
And how did that work? Like they literally, like if you have $1 million house, it'd be 20% for it?
Basically, yes, but it wasn't equity, a share program, so they'll give you the 20%, but then when you sell it, you have to give them 20%.
Just 20%, 20% plus interest.
What you owe,
Uh-huh.
plus, actually, whatever's greater, what you owe, or 20% of what you owe.
Oh, okay.
And it's still going on? Oh, no.
So it's not a gift.
How long did it, how long did it last? So,
Oh, we need to.
really?
They ran in the front.
Or like what you mentioned, the grants things,
Yeah.
or what is just something, once
Yeah,
it's gone.
They announced it, people swarmed them, got the money, and we're done.
Yeah, I had a buyer that was all for it when the money ran out, took a break.
Yeah.
You don't have nothing to shop for.
So I think that next time that one of those comes around, because it seems like they're coming around once a year now. That, first of all, I hate, but it's just the way it goes. I hate when people come to me and say, I want to make an offer, hurry up, pre-approve me. Because I have to stop, drop and roll for them, only to not get their offer accepted. And then, you know, then they drop out, you know, so it's like, it's unfair to everybody. People need to be prepared, because inevitably, if they are looking at homes, if they are looking at Zillow, they're going to see one they love, and then they're gonna wanna do something. So, you know, I would put the fear of God in them that, hey, lenders are busy people. They can't just be, you know, you can't get one at the drop of a hat, so don't count.
Cindy, how can we know when like a worthy grant, where can we get this?
So, when I know of one, like this grant program, which seems to be lasting a pretty good amount of time, I'll let you know, yeah, otherwise it's in the news typically. Or, you know, if it's somebody like a first responder type person or something, I would check with HR, you know, they probably, if there's a program, they may know about it.
HR of their department.
Yeah, their HR,
Yeah.
yeah. Do you have credit issues? Well, if you've got any late pays less than 12 months, in the last 12 months, you're kind of screwed, because they kill credit. Recent late pays, kill your credit score. So your only option there is to try to get the creditor to take it off for whatever reason. So if there's some legit way you can do that, great. If your score, if you need a score of 660 or more, we can try to restore you, which is means we look for ways to tweak your FICO score by maybe moving some of your data around. Keep your usage ideally 30% or less of what your credit limit is. And if you are a credit card user or have a bunch of credit cards or whatever, I would definitely track this on a spreadsheet because you're never going to remember. And then annualcreditreport.com. This is free. It's the government backs this. You are not required to put in a credit card. If you're ever required to put in a credit card, you're on the wrong site. But this allows you once a year to review your credit report. You can pull 1 or 3 bureaus, whatever you want to do. I would recommend 1 at a time. And then you can just make sure everything's correct. It's super easy to do the disputes online, or, click a button, not my credit, or click a button, I close this account or whatever. And they've got 30 days to respond. And I cleaned up some credit things super easy this way.
It's not gonna hurt your credit if you abuse it.
No,
No.
you only get once a year.
No, once a year.
Per credit bureau, which means you could do 3 a year in each one separate. I did it when after my divorce, I was checking it on the regular because my ex's bad credit kept slipping into mine. I fixed that. And then there's something anybody can use called Experian Boost, and I think it's like a rescore for just everybody. So
Do they
it's
need to
worth
pay
it.
anything?
No.
Oh,
And look out for authorized signer accounts. If you have any on your credit and that other person either has rates or has balances that they're carrying, get off as authorized signer. That's bad. If it's, a card that's old and in good shape and no one's got balances on it, that's great. So if you need a boost and you've got a parent boost, or we can put you as an authorized signer, that's good.
So my husband co-signed a car for his nephew for 5 years. 2 years already is gone. Thank God there hasn't been any problem. But I always worry that, he's a kid. What happens? He's,
Yeah.
he does something and it comes back on us. Can we call the car company and say it's been 2 years and we're paying it on time? Can you just get us out and stuff?
You can ask. My suspicion is that they're gonna say, that he has to refinance, and put it in his own name. That's the only way you can get off.
Nice, so we're in it to them.
Or you pay it off and then pay you.
Or maybe you can pay the refinancing fee, the fee, and if that's what
Yeah,
the
just
fee.
encourage him to refinance.
Yeah.
Maybe you can lower the payments. Co-signing, let me also talk about an aspect of that. Whenever you co-sign, their debt appears as your debt. So if you're trying to qualify for a loan, you gotta have that added to your debt. There is a workaround. It's mortgage or car payment, and if you're doing it for your kid, for example, and it's in both of your names, you gotta have it be in their name and yours, and they're making the payments, and you can prove that they've made the payments for the last 12 months, not in an account that has your name on it. Just shows their name only, then we can just get that. And then here's another one that really first-time home buyers are really bad. They call around trying to get deals and they let everybody run their credit. Don't do that. If you just want a rate quote, just get a rate quote. You don't need anyone to run your credit for that. Once, for example, if you came to me first and I've run your credit and now you want to call around to make sure I'm giving you a good deal, that's fine, but tell them what your FICO score is. Don't let them run your credit again. They don't need to. So once somebody goes through the pre-approval process, once they start it and I analyze it, they're gonna get one of 2 things. Pre-approval or a game plan. hopefully a pre-approval, but if it's not, they'll know exactly what they need to get pre-approved going forward. Rent to own, so this is what you want to, when you're talking to your clients who are first.
Thank you so much. The pre-approval, how long is it taking?
So technically, it lasts about 4 months, only because that's how long the dates on the documents before they get a job, so then.
And
they have to
then
get-
pre-qualification, right? No, the pre-qualification first and then the pre-approval.
No,
A lot of it
it doesn't need to be a pre-qual.
But with that being said, as the rates go up and down, like I was thinking with my client a few that maybe at 7%, what she thought that she was gonna be paying, maybe updated pre-approval or no
Yes.
payment. Yeah.
You can update your pre-approvals anytime, as often as you like, and I don't rerun credit. I don't know if other people, other lenders do, but I won't. And if someone wants a new thing, because rates are all over the place and we don't know, it's especially if you're writing offers, it's a good idea, just freshen it up.
Yeah.
Okay.
Sometimes they say within 30 days, sometimes they got pre-approval letter dated.
Yeah.
And how long they can lock the interest rate?
They don't lock it until they're in escrow. You have to have a property identified. So it just goes around. What you really want to tell your renters out there who think that their $2,000 rent is the only thing they can afford and forget about the buying the house, is that renting might be a good short-term solution, but it is definitely not a long-term strategy. It's perpetual debt. There's no benefit. And that obligation can do nothing but grow over time. The rents will go up. Rents are typically higher than mortgages, which makes complete sense because somebody's paying the mortgage and they're not gonna pay the mortgage and then charge you less, so they've got to make a profit, otherwise what's the point? And today's purchase environment for renters, affordability is the key. So it's always the right time to buy if you're buying a primary residence. It doesn't matter if the housing values are likely to go upside down tomorrow. It doesn't matter because when you're buying a primary residence, you're there to stay. So it doesn't matter what rates are doing because rates are impermanent. You're gonna get opportunities to refi. There's many new down payment assistance programs right now. All of them have different variables, so really advise people to get guidance on that. See what they qualify for, what works good for them. It's very easy to move up after you buy your first home, so be flexible. And I'm talking about be flexible on what you buy. Somebody might be determined to buy a house, but hey, if you gotta have a condo for now, it's better than nothing. It's still better than renting, Rates are temporary. There's gonna be opportunity to refi in the future. Mortgage balances shrink over time. Home values and equity grow. So you have more and more opportunity and financial security going forward with the mortgage than you do in your rent. Rent payments are forever, they never go down. The number one consideration for renters is, do you qualify? If you don't qualify, get a game plan. If you do qualify, buy a house. There's one goal, many solutions, and Dr. Cindy's. So the end, unless there's any other questions, but I will send you the slides and the flyers by email. And please call me anytime if you have questions or scenarios.
Stephanie, are there like who do you work with?
I work with, we're a direct lender, so we do our own loan, but we also broker, so I'll go wherever I need to.
I didn't know you were the restaurant.
In-house.